Here's your stock market review for today. Wanted to take a look at SPY stock and, of course, QQQ stock. I break down some of the major information that you need. Number one, we've got some economic data this week that might be market moving. More than likely, we'll see as is indicators coming in. This is the PCE inflation deflator. It is the Federal Reserve's favorite inflation number. Also have oil, gold, and US dollar. Let's jump in for your stock market review today. I do a daily stock market review. So if you're looking for that kind of content, make sure to hit that like and follow button. I'm an economist. I break down the economy and show how it will affect the stock market, specifically SPY stock and QQQ. Looking more likely on the bigger picture, looking a couple weeks out, a couple months out, things like this. Also, I am a value investor, so if that is what you're looking for, make sure to hit that like and follow button. Just launched this channel. It's growing quite rapidly. Here we are looking at a chart of SPY stock, and I put this all the way back to Friday's close. You could see where we were last Friday. SPY stock versus QQQ. QQQ, of course, being the NASDAQ ETF. SPY stock being the ETF for the S&P 500. We moved upward a little bit. Most of the move upward was, of course, overnight. Sunday night going at Friday afternoon, Sunday night being the blue and yellow. A little bit of a sell-off at the end of the trading day, but nothing really too spectacular. Everything was pretty much contained in a sort of tight little box for the trading day. The information we're looking for, economic data, I think it's on Thursday, although typically this data point does come out on Friday. We're looking at PCE inflation deflator. And as I mentioned before, this is the favorite inflation indicator for the Federal Reserve. They don't look at CPI, they look at PCE. So the market needs to look at PCE. As it turns out, CPI shows up about 2 weeks prior. So it kind of gives us, actually it's 1 week this week. It was just out last week. So it gives us kind of a pre-look at what PCE could look like. And I've mentioned this on many of my videos. Keep an eye on the mortgage rate and housing price index. If mortgage rates continue to slide a little bit lower, individuals are going to, it makes things more affordable for buying a house. More people will push into the housing market. We'll probably see some more volume and we'll probably see price move up. This tells me we don't hit that 2% rate that the Federal Reserve thinks that they can hit next year. And which calls into question, of course, there are 3 cuts next year. Keep that in mind. Treasury yield. Here's the U.S. 10-year Treasury yield. Popped up a little bit higher this morning, then kind of moved lower throughout the day, finishing up on a low note. And this really will be the big drive over the course of the next few months. So you'll want to pay attention to the Treasury yield. I talk about the Treasury yield in my stock market review daily. I look at SPY stock, of course, QQQ stock, and then the U.S. 10-year Treasury are the two things that I look at probably the most. U.S. dollar index. When the Federal Reserve made their comment last week, dollar index collapsed. Pretty decent move lower, about $3 total on the index, which was about just shy of 3% on 104 being the index. WTI oil, West Texas. Since interest rates are moderating slightly lower, oil prices have kind of moved back upward. But one of the things, and I've been mentioning this in the stock market review that I do every day over the past couple weeks, watch out for OPEC. We've seen a pretty decent slide, $79 all the way down to $68. I wasn't exactly sure we were going to see the 60 handle printed a little further than I expected, but again, a lot of that had to do with what the Federal Reserve had pushed out. Since then, it's rebounded. Where do we go from here? We're seeing the economy contract somewhat. Keep an eye on continuing claims and initial claims. Continuing claims, of course, are unemployment insurance numbers. I like these digits because they're pretty real world versus non-farm payrolls. It's once a month versus once a week. Continuing claims have been moving up slightly. How much further will they go is really going to depend on how impactful interest rates are. This is something I'm keeping a pretty sharp eye toward, is continuing claims. And I mention this almost every day with the stock market review, simply because this will really be a big player. If we start seeing big numbers in initial claims and then continuing claims, that could really spell some doom for the overall economy. And then SPY stock and QQQ would sell off. Gold. This is spot gold. With the spot gold hit nearly 2150. What was it, last week? Popped up pretty high. Record, all-time high for spot gold. Then sharply went straight back downward. I think someone was gunning for some stops, hit them. From then, because of what the Federal Reserve mentioned last week, we saw spot gold moving back upward. So if we do see interest rates moving lower or staying steady, then sliding lower, you can expect that gold will likely move higher to some extent. If the Federal Reserve actually is capable of containing inflation, gold might actually be contained and probably start sliding lower as alternative investments make more sense. This is something that I've been mentioning in the stock market review on a regular basis because of the big move we just saw last week in hitting the all-time high. Nonetheless, here is the number we're looking for: core PCE inflation deflator, sliding a bit lower, not quite even at the 3% level. It's still sitting at 4%. How does the Federal Reserve get all the way down to 2%? Now it's sliding lower quickly, but the pace of which inflation is declining, the rate is declining. So I just don't see 2% next year, plain and simple. And if we see mortgage rates moving lower and people step back into the housing market in a big way, this will push up price, which will keep inflation higher. 70% of the inflation that we saw, the big spike in inflation, and you're looking at it right here, was housing. Plain and simple math. I don't see how we hit 2% magically. I've been saying this for days, weeks, and a few months. We'll see though. Make sure to hit that like and follow button. We'll see you in the next video.